as the daily gap was finally filled. A hawkish Fed, after politely asking to close the door, said the Fed is committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. We are not confident that we have achieved such a stance, and the markets reacted. Let's go. Let's start today with the hourly on SPY, and then we'll take a look at the daily charts. Using technical terms, today is what we call a gap and a crap. Once we got the head that I was looking for, and we filled that gap, we never retested high of day. In fact, once 130 hit, our friends in the media must have received Powell's speech a half hour earlier or so, which is typical, as the market started to dump. Gee, I wish I had those friends, as I would have bought more puts at higher prices. So now that the dog caught the mail truck, what's next? Let's flip over to the daily. For starters, we confirmed that hanging man candle I was talking about yesterday, which 80% of the time means that the reversal is on. Plus, if you look at today's candle, you'll notice that we engulfed the last 3 days of trading, but it appears as though this gap may have provided some support. So the question in everybody's mind is, where will we bounce or won't we? So in my mind, if we're going to have a bounce, there's really only 4 areas that are the most likely to cause it. And for this, we'll use our Fibonacci retrace tool. If you don't know about Fibonacci, there are natural sequences that happen, like 1 plus 1 is 2, plus 1 is 3, plus 2 is 5, so on and so forth. And when it comes to trading, there is the 24%, the 38%, the 50%. I usually look at this 65% area, which is in between the 62 and 79%. And there's always a chance of 100% retrace. Now, when dealing with technical analysis, or TA for short, what I want to see is a confluence of indicators plus reversal structure on the 5-minute that morphs onto the 15-minute that morphs onto the hourly. We're also going to want to pay attention to the 5 EMA, the 50 EMA, the 13 EMA, the 20 SMA, and even the 200 SMA. Now, spiking the EMAs and the SMAs and then reversing is par for the course. And also, as I mentioned in my other video, that, the reversal structure of this always takes longer than I want it to because I'm impatient. And we can pretty much count on that this is going to take its sweet old time figuring out where it wants to go to instead of just one full swing in the next day. So let's clear the board and go through a couple areas that I think are most likely. Now, normally we don't get a reversal at the 24% area. So usually the first area of interest is going to be right around this 38%. So coming down into this 426 area would spike the 20 SMA and also bounce off the top of the gap before going higher. Now, a reversal at the 38% area is considered extremely bullish. Next, the 50% retrace would come down and spike this 200 SMA plus fill in this gap before ripping higher. And next, this golden pocket area between the 62 and 79% area, it would come back down, fill this gap before ripping higher. Now, doing this would be the least bullish, so to me it seems like the least likely, especially since we have CPI prior to open on Tuesday, and this report hasn't been exactly bearish as of late. Plus, we know that between now and early December, now that we've been finishing earnings, companies commence with buybacks, which pumps the market. So now, which one do I buy? Do I just blindly buy at these different support areas? Some stock channels will tell you to do that, but I'm not going to tell you to do that. No way, no how. Instead, we're going to look for reversal candles and structure that are going to let us know when is the proper time. So let's zoom into the 5-minute and the 15-minute into this area to see what kind of reversal structure we saw here and how I knew that this was morphing into a buy area. So you'll notice here I zoomed into the 5-minute level. And since all charts act and react the same, we're going to look for the same stuff with that retrace that we just spoke about. So if we use our Fibonacci retrace tool, we'll see that right here we got a reversal candle, a green one reversing off a red one right at the 50% retrace area, which is a typical retrace. And if we now zoom into the 15-minute chart, we see that this morphed onto the 15-minute chart to get a reversal from the red candle to a green one. So this indicates that we have a bull flag that's ready to break out, and there we go. So this is where I bought into my position with SPXL and TQs earlier in the week that had the mammoth run. Now you'll see that this structure here presented itself as an inverse head and shoulders, but you can always get a cup and handle with that distinctive W at the bottom as well. And then the break of that neckline is super bullish. Now, I'm not going to go through Qs since really it's the same setup. But with IWM, this is why I told you we just don't blindly buy at support. Now, we're not going to look at the lower time frames, but if we did, we'd see that this initially on the morning pump went ahead and opened above, but when it went back to retest this trend line, it failed, and then the selling commenced. Now that we've gotten below this candle body area, I think we're likely to come back down and fill this gap. But once again, we're just not going to want to buy blindly at support. As I mentioned yesterday, this thing could come back and do 100% retrace, forming a cup at the bottom before moving higher. Now, yesterday I talked about how I sold IONQ because it was entering earnings, and I'm glad that I did. After hours, it was up 8%. This morning, it was down 8%. And this morning, it went ahead and spiked up 8%, but then finished down on the day. Honestly, that feels more like a day trade than a swing trade. I'll be reevaluating about keeping this one. Yesterday, I spoke about instant regret as this one pumped on the news of their new drug, but instant relief that I sold it when I did. As today, this was down almost 5%. A few others signaled today that had already run, so I alerted the Discord. At this point, I was either looking for a breakout or a pullback, thinking the latter was most likely. If you go ahead and subscribe, I'll make sure to share some of these as they become available. Again, if you want to see all my signals in real time, then join the Discord for only $5 per month, and you get my feedback as well. That's all I have for now until the next video, and we'll see you then.